Hello, everybody. Mike Nelson, Efficient Lending, coming to you here. What day is it? It's Wednesday, the 27th of May. I can't believe we're almost end of the May. Coming at you with my weekly agent and market update. And I will tell you, I'm pretty encouraged right now. I like what I'm seeing in the market. Some of the things that I was hoping to see back in the February-March timeframe, like loosening of overlays, things of that nature, I'm starting to see. I'm getting notifications from my investors and whatnot that is in fact happening. I'm also just anecdotally hearing a lot of good things from real estate agents, buyers, and sellers that I'm talking to every day. So in this update, we're going to be talking about Case-Shiller, the FHF, which is a home price index, FHFA House Price Index, unemployment, new home sales. I'm going to talk a little bit about forbearance as well. So hopefully this will be some encouraging news. The net of this really is, if you're an agent or a buyer or a seller out there, and you're worried about the market, you're concerned about the market, I will tell you, I mean, I am as well. We certainly hope people are doing okay and recovering from COVID and unemployment, things of that nature. But we really got to be doing some good planning, some good business planning in our industries, respective industries, because I think there's quite a bit of opportunity out there for us right now. So I'm excited about that. All right, let's talk about Case-Shiller. So this is through March. So up to March. So obviously it's not reflecting the complete extent of what's gone on in the last several months. But the point that you want to make here is, look, in the Case-Shiller index, we really had nice, good, healthy market coming into this pandemic. 4.4% increase. We were up 0.2, and then you can see the 20 city index. If you look at Phoenix annually, Seattle, and Charlotte, I mean, these cities were really leading the charge. So the good news, and I was saying this back a couple months ago, is that we were departing the market we were in from a very healthy and strong place, which is good. Let's talk about the FHFA. So this is an important index as well, because this index is only looking at homes, single-family homes with conforming loans, conforming conventional loans. So you're getting a little bit different slice, and it's again through the same time period. So it's prior to really the big impact that COVID had, but 6%. Increase is strong year over year, and then you can see by region, and all the regions are doing very, very well as we were entering into COVID. So I was really encouraged by that. I mentioned that in my weekly update a couple times back when we were just entering it, because I was expecting that we would start, when we started to recover, see some signs of life, and sure enough, we are right now. So in the financial markets, what I'm seeing is, rates have stabilized. They're still nearly a full point better than they were a year ago at this time. And the experts, as unemployment starts to wane, meaning more people back to work, a lot of the pundits and the experts are suggesting that rates will stay where they're at and potentially could go down. And I tend to agree with that. So I'm going to see a very favorable interest rate market as we continue on in the recovery here. So you look at this through April, of course, the market was down 6.2% year over year. You would expect a pretty significant reduction. Then you see the median home price is down to $309,000 from $339,000. Now, I want to make sure everybody understands this is the median home price. So it's not what people are listing their houses for, it's what's on the contracts. So, we can't really say that prices are dropping, but signed contracts are a little bit. And I think that's okay, and I would suspect that that's really just because of what happened in the first couple months of COVID. But I want everybody to see kind of the line is recovering. In April, if you see the graph at the bottom, it's not in that downward trend. It flattened relative to March and is ticking up a little bit. And believe it or not, mortgage applications up 9% year over year. So there is a lot of demand right now for housing. And I think you're going to see a lot of price stability in homes. And I also think, it's still going to be a great place for investments. About 65-ish, 64% of the mortgage applications right now are for refinance. And as we emerge, people may have assets left over that they can use for investment, things of that nature. So I think it's generally a good sign. The other thing that I want to talk about, where's my screen going? Is unemployment. Sorry about that there. Unemployment how do we say this? It's getting better in that there are less applications week over week for unemployment benefits, but we're still at ridiculously high numbers. To give you an example, back prior to COVID, we were in this 200,000 applications range. Well, we're at 2.44 million last week. So we're starting to hear people come back to work. We're starting to see that happening. The last thing I want to talk about that I'm really encouraged about is forbearance. Now, I want to make sure everybody understands forbearance is a good tool if you're about to lose your home and not have shelter. But if you can make your payment, don't put your loan into forbearance. It's just really going to be something that sticks with you downstream. Some of the changes that just came out, though, is if your loan is in forbearance and you've made all your payments, you still can take advantage of a cash out refinance. You still are eligible for mortgages. If your loan is in forbearance and you've missed, the guidelines that are coming out now is you can get current, make 3 consecutive payments, and then you can qualify for a loan. It was at something like a year of consecutive payments. I will tell you with caution, though, the investors I'm seeing are overlaying on top of that 3-month rule and saying something like 6 months of consecutive payments. If your loan is in forbearance and you missed a payment, then you can qualify for a new loan. That's going to be very important as the market continues to improve, because people want to take advantage of cash out refinance. The other thing is I'm starting to see investors remove the pricing hits, the pricing adjustments for cash out refinance. Those are all things that we would expect to see happening in a market that is improving and people have more confidence in. So I'm really encouraged by that. I'll leave you with this. I think it's a great market right now. There's a lot of demand. Applications are up. I'm seeing a fairly strong purchase market right now. Of course, refinance is strong. So my recommendation is, look, if you're a buyer, seller, or you're a real estate agent, let's work together. Let's look at the products that are coming out, how we can take advantage of this market. I think it's a really good time. So thanks again for joining in my weekly agent update, market update. I always appreciate it when people check out my content. Feel free to call me, email me anytime. Would love to chat with you as well. Have a great week.